So Chris, if someone is eligible for the VA benefit, right? I mean, I know that there's a lot of other programs that they may be able to use. In your opinion, what would be a benefit from them utilizing their VA benefit as opposed to going and using a different type of loan?
Thank you, and that's a great question. So if you're a veteran or an active duty service member, first off, you've earned your VA home loan benefit, so please use it. So a big advantage is going zero down and not adding any type of other lien, any type of down payment assistance that will help. So that's probably one of the best features of the VA home loan. Number two, no primary mortgage insurance. So other VA with conventional and FHA, you're still going to be paying a mortgage insurance. FHA is permanent. Conventional up to 20, you need 20% equity to knock it off. With VA, because it's fully guaranteed by the VA, no mortgage insurance. So it's a huge advantage. Number three, better interest rates. So usually VA home loans have better interest rates than FHA and conventional. So it's a huge savings for a veteran. And like I said, please utilize it because you guys have earned it. You guys raised your right hand up, and that's the gift back from the military for your service.
Now, what about qualifying though, right? Because I know that most people, when they want to buy a house and it's their first time, they automatically think of a FHA, right? First time home buyers program or something like that with a down payment assistance program. DPA, correct? Okay, so if you hear DPA now, you know what it means.
Yeah.
Now, what about qualifying though? You know, is my borrower going to have a more difficult time qualifying for a VA loan as opposed to a different type of loan?
No, not necessarily. And VA actually has very looser guidelines than FHA and conventional. So the debt to income ratio, so how your liabilities are measured against your income, are actually a lot more flexible than they are with conventional and FHA. Also, when it comes to your credit score, it's a lot more flexible. So it's different with every bank. But I strongly urge the veteran or active duty service member to not self-diagnose, put an application in and see at least where you stand.
Okay, I mean, I love that. Now, you mentioned a PMI, right? Now, okay, I mean, what is that?
So PMI is the mortgage insurance because the bank is taking a risk on giving you the loan at such a smaller down payment. So that's how they use a mortgage insurance in case you can't pay it. So we do our due diligence, and the bank does as well with underwriting to make sure that client is well qualified to afford the mortgage. But that mortgage insurance is there as a placeholder just in case they can't pay. So it's more used from the bank to cover themselves. Okay,
now from a buyer perspective, what does this mean to them? A higher payment, or what does that mean if I'm a borrower and I'm going to have PMI?
So
what does that mean?
So it's a higher payment. So when you're comparing VA, conventional, and FHA. So conventionals is a little bit lower depending on how much down payment you put. So it usually changes from 3 to 5% to 10%. And at 20%, you pay no mortgage insurance.
Okay.
For FHA though, it's permanent. So eventually, once there's enough equity on the property, you're gonna want to refinance into a conventional loan to take off the PMI.
Okay, all right. So I wanted to debunk some things, right? Because everyone's always on the internet and they hear all these things like, oh, make sure you have 20% down so that you don't have that extra payment, I'm sorry. So, I mean, but I always think, in my opinion, that may not always be the case for every person, right? Sometimes it may be beneficial to buy a house even if you don't have a 20% down. What is your opinion on that?
So I always say, if you can afford the payment, get in it. If you're using down payment assistance, if you're using every program to get a house, only because of all the financial benefits. And we actually go through all this with our clients. So number one, that payment's going to be fixed for 30 years, and we actually teach our clients how to pay off their mortgage in less by paying 13 payments or 26 payments in a year. Number two is because that line item, either rent or mortgage, is going to be the highest for 99% of Americans when it comes to their monthly budgets. People get promotions, people get more education, people get higher pay. That mortgage is going to stay fixed. So that's one of the main benefits. You also get the tax benefits as well. So a lot of renters don't know this, but they're actually paying the taxes for their landlord, and their landlords are actually getting all the benefits from it, not them. So when renters come around tax season, they can't write off any property taxes because they haven't paid any. They technically paid it for the landlord. You get a month deferral as well. So let's say you close in February, you skip a month, you're going to be, first payment is going to be in April. And I would say that the biggest benefit that you're not going to see on the sheet as compared from renting to owning is that psychological benefit that you're going to get from actually having a name on your house. And it just gives a lot of people confidence and ownership that they have a home. And it's very important to obviously make the payment. But I've seen from the 150 clients that we've served from 2020 to now that their lives just seem to get better, as far as like, because they know that the importance of that home, and they have like just a sense of honor of calling their place of residence their own home. So.
Okay, all right, yeah, I love that answer. Yeah, I agree with it 100%. So a lot of my clients, Chris, ask me, well, what is a VA loan? I mean, what does that even mean? Do I qualify for it? I mean, what is it?
So a VA loan is the loan that is made by the Veterans Administration, and they give their licenses basically to banks to be able to fund loans, and they put a guarantee on that loan. So that's why banks offer it to veterans. So it's to either active duty service members that in time of war, over 90 days of active duty, and reservists is 6 years if they haven't been activated. But if they've been activated for over 90 days, they're eligible for the loan. So anybody who's currently serving or has served in the military is eligible for the VA loan.
Okay, perfect.